Now, this is an extremely important video. See, when I reject a particular stock and when I make a video about that, I go back and check whether my decision was right or not. So, for example, you look at Motilal Oswal. I made a video on Motilal Oswal on 9th of December. The video was recorded on 9th of December as the market was on, and it was published on 9th of December, 6 o'clock in the evening. So if you look at my YouTube channel, so this is, if you scroll down, see there is Motira, see this video. Okay, declining industry strength for Motilal Oswal stock. Have a look at this video. It was published 12 days ago. So uh, today is 22nd of December as I record this video. I don't know when this video will get published, maybe later, but have a look at this. On 9th of December, I made a video and I rejected Motilal Oswal. You look at that nice smiley that I put there. Okay. So why did I reject the stock? Well, it's, you can check the video in detail, but let me show you a quick review of the numbers. Okay. Of course, declining strength is written in the title itself. That was one reason, but there was another reason. I click on consolidated. If I come down, see, from 2022 to 2023, there was a decline in the EPS, annual EPS, and then it again went back into new high ground. Okay. Now, when something like this happens, when the EPS falls and then it again goes to new high ground, in such a case, okay, it is written in William O'Neill's book, How to Make Money in Stocks, that that is not the ideal characteristic of a leading stock. For a leading stock, there should be some positive growth in EPS on an annual basis. The rate of growth is not important, but there should be some positive EPS growth on an annual basis in the last 3 years. Moreover, the median growth of EPS in the last 3 years of super performers of the past was 36%. So, preferably, if it is 36%, it is, you are buying a stock which is close to uh, uh, a stock which shows leadership characteristics. So this stock never showed leadership characteristics. So that is why, even though the relative strength was in the 90s when I was looking at this stock, currently it is 89, but here it was 92. Although the relative strength here was 90, see it shows 91. Okay, relative strength is 91. Sales growth is 73%. Earnings growth is triple digit. Okay, in spite of all this, and the industry rank was poor, in spite of high EPS growth, in spite of high relative strength, I still ended up rejecting the stock. And I created a video to explain in detail why did I reject that stock. Okay. So it's very important to go back and check what you rejected and then see whether that decision was right. So if I had bought the stock on this day, see there is a mother baby candle here. There are 6 points in the base. The buy point is in the green zone. There is blue, green, red. So it was a perfect technical setup. Good technicals, good comparatives considering 92 relative strength. Everything was fine. I found a couple of weaknesses because of which I chose to stay away from the stock. See, if I had bought on the yellow line, okay, look, from the yellow line, assuming I buy at the yellow line, which is never going to happen. Okay, look where the stock is from there till the low. It has dropped 9.90%. Okay, so you have to go back and check whether the decision you made was right or not. Okay, the market will never reward you for activity. The market will reward you for being right. This is what Warren Buffett said. This is not my statement. The market will never reward you for activity. The market will reward you for being right. So everybody looks at how much money was made or how much return was made. But what about the losses that you avoided? Okay, this is the big loss that was avoided. Okay, another example. If you look at Divis, is another stock that I rejected. See, on this day, I think I recorded the video on this day, which is, so on this day, this is 28th of November. I think I recorded the video on 28th of November because there was a buy point here. Again, 4 points in the base. buy point in the green zone. Okay, good setup, high relative strength stock. I think the stock had relative strength in the 80s. Let us check. I don't remember. Let's go to divis. So on this day, what was the relative strength on this day? Oh, it was 82. See, relative strength of, no, not this day. It was 80, which is still fine. So relative strength of 80, which is right up there in our criteria. So video was recorded on this day. The video was published on this day, 6 p.m. Okay. And I said I will reject the stock. So if you look at divis, yeah, see this one. Divis 3 weeks ago, I published the stock. You see this stamp here rejected. Okay, divis lab I rejected. And I explained the reasons why I rejected. If you go to divis, you see again 111, 68, 60. So consecutively 3 years, your annual EPS is declining. So that's a very important number. Okay, and probably the group rank was also not favorable. The return on equity was also poor. Did I look at margin? I don't remember. You can check that video. Yes, margin is declining. See, 25, 28, 33, 23, 20. At least last 3 years, the margin is shrinking. So I think I have discussed all of this in that video. You can go and check because this is all what I look for. So again, I rejected divis because of these reasons: annual EPS, shrinking margin, poor return on equity, poor group rank. Although the EPS growth was good, but look at the sales growth, not 25%. We need minimum 25%. Accelerating sales growth for past 3 quarters was there. That is a good sign. Okay. But there were problems in the stock. So I rejected the stock. And then look what happened. There was a falling window from here, assuming I had bought the stock here near the yellow line till the low of this candle. That's a 7% decline. And that too with a falling window. And that too, the price is now below the 50-day simple moving average. Any stock which is below the 50-day simple moving average on a close on a Friday should never be in a trader's portfolio. Okay, whether you are swing trading doesn't matter, whether you are positional trading doesn't matter. Any stock trading below the 50-day simple moving average should not be in the portfolio. This is for long only swing and positional traders. I'm not talking short selling or intraday or things like that. I don't do all of that. Okay, futures, options, I stay away from all of that. So this is below the 50-day simple moving average. What was that earlier stock? I forgot. Motilal. Yes, let's check Motilal. Again, broke the 50-day on a close on a Friday. What does that mean? It's a weekly close below the 50-day simple moving average. Sometimes what happens is the stock closes below the blue line, something like this, in the middle of the week. But by the end of the week, which is on Friday, it comes back into above the 50-day simple moving average. So you have to look at the Friday closing. Okay, does it close below that blue line? Okay. In this case, it has happened because I'm recording the video on a Sunday. So obviously on a Friday, it has closed below the blue line. So Motilal and Divis both are down, okay, below the 50-day simple moving average. Next, I think Skipper was, let's see when this video was recorded. So this video, not even in a state where we. So this video was recorded on 29th of November. Yeah, 29th of November. And it was published on 2nd of December. So let's go to Skipper. I have not checked this. Divis I had checked, Motilal I had checked. So 29th of November. Yeah, on this day the video was recorded. Yeah, on this day the video was recorded because see there is a buy point here. You see almost a mother baby candle. Let me draw the base for you. See, it's important to go back and check. That's the base. So the high of this candle 574.40. 574.40. So on this day, the video was recorded, and on 2nd, I think the video was published. So on this day, the video was published. Okay. So Skipper also, I did not buy the stock on this day. It went up, but that breakout from this level did not sustain. See, it went up 15%, but now by end of Friday, which is 22nd, 20th of December, it is back near the yellow line. Okay. So it was not sustainable. Even though the stock breaks out, if there is a weakness, it will not sustain. And check, it has probably closed below the, what is the closing price? 563.15. And the blue line is 563.80. So it has closed below the 50-day simple moving average on a Friday. Okay. So let's see why I rejected Skipper. See, even if it breaks out, the breakout is unlikely to sustain because of weaknesses. See, group rank poor. This looks fine. Annual EPS looks fine. What else did I see? Poor return on equity. What about margin? Poor margin. 2% margin is nothing. It's just so return on equity poor, margin declining. I don't know what was the relative strength at the time that I rejected the stock. So I think it was this day, 88. Relative strength was good and 52-week high was there. I think I rejected probably because of the industry strength. So let's see. I have not mentioned the reason here. But anyways, the breakout did not sustain. The important point is I saw something in the stock which made me reject the stock. One reason I think, if I remember correctly, it is not a leading stock. Okay, if you go here, if you click on stocks, I think this was the primary reason I rejected. See, market cap wise, where is Skipper? Skipper is not even in the top 20, not even in the top 15 or top 20 when it comes to market capitalization within its industry group. So I think this was the primary reason I did not choose to put my money in the stock. And you see, eventually it went up 15%, but broke again and came back to the yellow line. And now it is falling below the yellow line. So even if it broke out, that breakout was not sustainable because there was weakness. Now, can it form another base here? Of course, it can form another base here. But the question is, it came back inside the point is it came back inside the base. Okay. So we have discussed Motilal, we have discussed DVs, we have discussed Skipper. One more stock that I rejected, but I did not make a video on this. Let me explain. Siemens. Siemens is a stock that I rejected on this particular day. See, there was very tight price action. See, mother baby candle here, mother baby candle here. So there were buy points developing. Finally, on this day, the buy point came and it was very tight consolidation. You see this very tight consolidation. So on this day, I was in a dilemma, should I buy the stock or not? And I rejected the stock. So let's see, why did I reject the stock? This is a no-brainer. I mean, have a look at this. Sales growth less than 25%, not accelerating for 3 consecutive quarters. Group rank is horrible. Okay, group rank is poor. Rest everything looks fine, but no consistency in the earnings growth, no proper acceleration, and it's a huge company. Although I think it's a leader in its space, but I saw some weaknesses in the stock, and I rejected even the relative strength on that day. Yeah, it was, see, it was 77. So poor relative strength, poor group rank. Okay, I don't know whether the group rank was declining or not. Poor sales growth. Okay, these were the reasons I rejected the stock. And look what happened, 10% crash in a single day. So your ability to reject stocks is far more important than your ability to select stocks. Okay, now did I anticipate this? No, I did not anticipate this because who knows what is going to happen next in any stock. I think it was because of some earnings call, something happened in the earnings call and the stock collapsed from there. Okay. But on this day, did I know that this was going to happen? No, I was just looking at the characteristics that were shown in Market Smith. I was just trying to compare whether this stock comes close to the characteristics of a leading stock. If the answer to that question is no, I'm not getting involved with this talk. We don't have to attend every party in town. So that's all I did. What happened next? I can't take credit for that. I can just see whether my decision was right or not. Okay. And it was absolutely right not to buy the stock here because there were weaknesses. So it is very important that you first jot down what are the characteristics of a leading stock. put them in a piece of paper. And whenever you are looking at a new stock next, compare that stock with these characteristics and see how close the stock comes to the characteristics that you have jotted down on your paper. The closer it is, the higher is the probability of success. So we have discussed Motilal, we have discussed Divi's, we have discussed Skipper, we have discussed Siemens. Motilal, Divi's, and Siemens crashed. Okay, it was a good decision. Skipper, probably if I had managed the trade properly, if I had taken the trade and managed the trade properly, I could have made maybe out of 15%, I could have captured 4 5%. But again, I don't want to get involved with a stock which is not a leader in its industry group. And as you can see, eventually the stock broke and came back below the buy point, which is not what we would expect from a leading stock. Now it has closed. All these four stocks have closed below the 50-day simple moving average. I don't know what is going to happen next. Moreover, people talk about indicators in the market, but my argument is that price itself is an indicator, it's a leading indicator. Where do indicators come from? Indicators come from two inputs, price and volume. But my argument is price itself is an indicator. Price comes first, the earnings decline comes second. For example, so if you look at Divis, you go to Divis, you go to the weekly chart, you see the stock started falling from here basically, but the earnings started falling from here. So if you see, this was October 2021 and this was October 2022. So the earnings first time actually showed a decline in October 2022, but 1 year before that the stock had already started falling from this high. Okay, so first the price will fall, then the earnings will fall. Okay, similarly, if you apply that same concept to Siemens, you see currently you see this orange line, which is the earnings, which is going up. Okay, now the stock has crashed 10%. Probably, okay, probably, I don't know, if the price is assumed to be a leading indicator, probably the earnings will begin to fall later, because the stock market is not a lagging indicator. The stock market is a leading indicator. The price will fall first and then will fall the earnings, because the people who are trading the market can anticipate a decline in earnings. So that psychology shows up in the market. So forget about using indicators on your chart. Your price itself is an indicator. Okay, so that is the last point I wanted to cover. So the moral of the story, the moral of this video is that when you reject a stock, okay, you jot it down somewhere on a piece of paper to check why did you reject the stock, and after a few days, after a few weeks, go back to that paper and check what happened to the stock. Now I make videos, so I can go back to the video and check what was I rejecting. My YouTube channel itself is my trade journal. Okay, but since you are not making videos, at least write it down on a piece of paper why you rejected a particular stock. Okay, and then go back and check. This will help you in your trading journey. Okay, thank you so much.